Hi, it's Helen Tarrant. Welcome to another episode of Commercial Property Roadshow. You're here with Helen Tarrant, and I'm back here with Amira Shukri, here with Property Tax Specialist, and today we're going to talk about the wonderful thing called GST. It is so exciting. I can't contain my excitement. The reason we talk about GST, because on a serious note, one of the things that most people get wrong when they go from residential purchase to a commercial purchase is that they don't know how the GST works. Often you see an ad on Real Commercial or commercial real estate, and it says 300,000, 400,000 plus GST, and then in brackets says if applicable. So my client comes to me and says, what do I have to pay GST? What is it if applicable with? How do we know if it's applicable to us? And then they get a contract which then asks them to tick the box whether they're registered for GST or not registered for GST, at which point they get totally confused. And then they try to find some stuff online and go, well, we don't have to register because, our rent's below, a certain threshold. But then their solicitor tells them, yes, they have to register for the purchase. So that all sounds really, really confusing, which is why I'm here. And we're going to have an episode dedicated to GST in commercial purchase. So tell us, guys, in your infinite wisdom, firstly, what is GST? Why is that applicable to even commercial property and not residential, I suppose? And in what circumstances do they register?
GST is a goods and services tax. It's applicable to everything that goes except for residential property, which is supposed to be called input tax. That means you can't charge GST on it. Now, why commercial property is different is because it's considered like a business. And the key words here is going concern. So a commercial property with its tenants is considered a business, a going concern, and therefore to make it and facilitate commerce, the government says you don't have to charge GST if both the buyer and the vendor are actually both registered for GST and they agree that that's how the sale is going to be conducted.
So GST is 10%?
10% of purchase price.
A purchase price. So if you have a property with, let's say you're buying a $500,000 property and you have a tenant in there and he's operating his business out of there and you've got a lease, then you don't have to pay an extra 10% on top of that.
Correct.
So it's GST exempt.
Correct.
But if you don't have a tenant, you're buying a vacant property and there's nobody in there, then all of a sudden you have to pay GST
on top.
And so it's an extra 10%, so in this case 50,000. Now, do they get that GST back or is it gone forever?
No, they get it back because as you pay it, you claim it back as a credit against the whatever rental incomes you get. Yes, you do get it back, but it's the timing issue. A lot of the time, people don't have that extra 10%, or they don't have to go to the bank for an extra 10%, or the bank doesn't want to give you an extra 10%. So it's a timing thing and is designed to facilitate business for people going into commercial property or to make things, because usually commercial property is housing businesses that want to go forward and the cash is better used for other purposes.
Well, you're coming up with 50 or 100 grand on a purchase. It can dent your cash flow significantly.
Yeah.
And what about then, how is that, once they register for GST, then do they continue on with that registration going forward?
Normally you would do that for the first quarter so that you can pass the sale, and then you would have some various bits and pieces of expenses, setting up fees and so forth, advice. After that, if your rental is less than 75,000, which means $5,000 a year in GST, you can ask the ATO to take you off the GST registration. You don't have to pay it, but it does take a cycle for them to make those adjustments. So you need a bit of planning around it, and we go forward from there.
So I guess the thing is there's a difference between whether you're going to be an owner occupier, an investor, and if you're an investor, if you're going to be speculative in the market and you're buying a vacant property, put a tenant in there, and then you want to sell that property, then that GST issue really becomes an issue, because all of a sudden you might be buying a property and you have to come up with an extra 50k or 100k, and you might just only have a deposit to be able to buy a $500,000 property. At which point, then you will need to look at buying a tenanted property. And one of the ways that we look at doing that is perhaps look at buying a property with a short-term tenant in there instead, and then looking at in the future swapping out that tenant. So the tenant might be paying below market rent, and then swapping out that tenant for a higher paying tenant, and then looking at speculating and really on selling. But for most owner occupiers, you're going to be buying a vacant property, so the GST will be applicable. So what about
Helen, there are ways. So when you come to that point, there are considerations one could put so that it can be planned so that no GST is paid.
Yeah, so absolutely. So really, the GST issue is something to raise and to talk about, and to early on, so you can plan your cash flow and to plan to make sure you've got enough deposit for whichever activity you're going to do, in terms of whether you're treating it as a set and forget, whether you do investment, or whether you're owner occupied as well. And I guess the other question is, what about in entities? Is it entity specific, or is it like just all lumped in together?
Right across the asset. Yeah. It's based on the business. Commercial rent is considered a commercial transaction. GST is applicable on it. As I say, if your rent for the year is low, you have the option to come off it. But really, it doesn't impact on the tenant, because they'll get a credit for whatever they pay.
So if someone wants to buy multiple properties in one entity, so they set up, regardless company, trust, or whatever they decide to set up, but if they decide that they want to buy one or two or three in that, then the GST, when they register, do they continue, even if the first one might be only 500,000, might be only collecting $25,000 in rent a year?
Yes, it'll apply to all of them.
Yes, so it's cumulative. Up to 70,000. Anything below 75,000 is optional. Above, you have to register.
And that's another consideration from what type of structure you're going to have, whether you're going to have, let's say, one trust for one and another trust for the other one. Just depends on your cash flows and the impact of a GST on the total group setting.
And when they set up an entity, should they register for GST straight away so that they're ready to purchase? Or
preferably, because I can from the war stories that we help some of the clients, they come in, the opportunity might just be there for a fraction. So you need to be ready to get it rather than lose the option. And if you're registered, ready to go, it just facilitates the whole transaction.
Yeah, so that essentially refers to getting your entity, getting it registered, getting everything prepared so that you're ready to execute on purchasing your first commercial property. In a very competitive market, or when there is a good property, and I always say this, if there is a brilliant property out there, it's worth fighting for, and that means that having your entity set up and not having it set up, and I've seen our clients lose out on deals in that space of time. So that's why it's worthwhile to engage the conversation early, and that's why we brought Amir and Shukri on, so that they can talk to you about some of the essentials around tax, especially around GST and the differences between commercial and residential. So before we sign off, anything else regarding the GST?
Yes, the GST works on the rent and your expenses as well. So the expenses, you can claim back the GST. So that is an important factor to consider.
Fantastic. Well, and how will they reach out and find out more information about what you do, and then how you can help them?
Our website, they can contact us. I'm sure the information will be there.
www.propertytaxspecialist.com.au. Or our phone number
1-800-800-TAX.
Fantastic, that's lots of eights in there.
Or our email at reception@propertytaxspecialist.com.au, or just call us up and we'll get back to you.
Yep. So we can obviously pass that details on to you in an email if you want to reach out to us at helentarrant.com, and the contact us page. There's also going to be some videos of Shukri on that website as well, and also we'll be posting their link to their website below as well. So in the meantime, thank you for joining us, and don't forget to subscribe, hit the bell, and we'll see you in the next episode. Bye for now.